Relations joins me now to talk about some of the market developments. Ian, good afternoon.
Good afternoon. Good to be with you.
All right, let's start with this interest rate hike we saw yesterday, 50 basis points. It cements the Reserve Bank's inflation-fighting credentials, some uncertainty coming in here, but painful for consumers though, isn't it?
Yes, but first of all, inflation-fighting credentials. It has to be done, otherwise the markets, international investors will say that we're losing control of a situation which is dire at the moment.
Yep.
Remember, what he did say was we expect CPI to peak at 7.8%. That's a heck of a long way above the top of the target range of 3 to 6%. So we can say that this is probably an indication of the first of perhaps at least a couple of more moves. From a consumer's point of view, if you take a R1,000,000 mortgage, which is not exceptional these days, it's going to mean probably about R400 extra of expenditure per month. Maybe that can be managed, but don't forget we've had two 25 points increases, so that has been added on. We're probably going to have another 0.5 to 1% added on, so this may just be push the level of affordability, and certainly maybe I'd say put a bit of a ceiling on house price advances.
Yeah, what happens to property stocks on the JSE now?
Well, the basic cost of business, the cost of capital is going to be higher. So I would just say, I don't think it's going to be a reversal, but it's going to stop them in their tracks. It may just lead to a bit of consolidation, and I wouldn't be surprised to see a bit of a pullback.
Look at that numerical number I just read out on the Rand, Ian. 16 Rand, 7 cents at the moment to the US dollar. Is that got to do directly with this interest rate hike?
Well, it has a great deal to do with it. What I think we have to understand is that the Rand exchange rate reflects foreigners' view of the value of the Rand and the value of the South African economy. And yes, there may be a knee-jerk reaction initially, but hold on a moment. I think that we may see the fundamental infrastructural problems that we have are not yet being addressed, and so I think that we may just see a weaker medium-term trend as we've had in the last 6 months. That could well continue through the first half of this year and possibly longer.
Let's talk about that. I mean, we spoke about the restoration of credibility in the South African economy, but the bigger issue is the stemming of outflows. I mean, you mentioned to me earlier 20 billion Rand in January alone.
That's huge, and that just shows that foreigners are voting with their feet. They're getting onto their feet and going away and taking their capital with them. That's the exact opposite of what we need. We need to bolster the confidence level. We need that capital to offset the twin deficits, the budget deficit and the current account deficits. The minister always points out not to worry about these because they will be offset by foreign portfolio inflow. It's going the other way. It's exacerbating the situation, and this, I think, is a very worrying factor if it's going to continue. All
right, let's talk about the oil price. So you have a small little jump, talk about OPEC speaking with Russia, some sort of cooperation there, but it's minuscule given the slump that we've seen over the past year.
Look where it's come from. It's come from $100, so it went to just below $30, and now it's $35. Hooray! $5 after a $70 fall, plunge. And I think that has to be said. It's reacting to potentially good news that there may be some pullback in production by members of OPEC, but they've denied it very quickly. So, I think they're still going to look after market share. They don't want to lose that, and the Americans are in a war with them regarding holding on to that.
Cecil will be watching that oil price carefully. I mean, they're saying 6 months to December, profit expected to drop by a third.
Yes, and of course, and they've got massive expansion plans, big new investment program in America, and I think that on the chemical side, and I think that this really is going to make it very difficult as to whether they can justify taking on the capital that's going to be needed for this sort of expansion. So I'd say a bit of a wobbly time for Cecil ahead.
Yeah, well, wobbly also in terms of our mining sector. I've got a few seconds, but I want to get your take on the job cut scenario that we're seeing this week. We've heard Kumba, and now we've seen that Lonman's doing the same thing. What's it reflecting, Ian?
This is tens of thousands of workers being laid off. Remember that in the mining industry, every worker has an average of 5 or 6 dependents. Some of them have even more because this man may be looking after his brother's family because he's succumbed to some other disease. And I think what it's going to mean is government can't just let them starve. That doesn't happen these days. They have to provide social grants. They've got to provide feeding schemes. All this is going to cost a heck of a lot. That's got to come out of budgeted revenue. Now, will we have more revenue to provide for this expenditure? I think not. So what it may mean is a big strain on government's capital investment programs, on their infrastructural build hopes, and we may just see all of that slow down, and it slows down the overall economic growth even more, which is why I come to an outlook of zero change this year.
All right. Ian Cruikshanks from the Institute of Race Relations. Always a pleasure. Thanks for coming in.